Welcome back to Fast Market here on the Schwab Network. It's time for our cash tag segment. For that, let's bring in our next guest. That's going to be Landon Swan. He's a co-founder at Likefolio. Welcome back to the show, Landon.
Thank you. It's great to be here.
All right. It's great to be a TTD investor. And your data, we've talked about this stock probably every quarter, and your data is always pretty robust. The stock's hitting all-time highs today going into this report. Really high bar here, Landon. Do you have the data that backs up this move?
Yeah, I tell you what, this is a high bar. I mean, the stock is it ran up to 120, and then just the last couple of days, it's jumped up over 130. Moving a lot with the market, but still, it's a very high number. We've been bullish on this one for a while. April of 23 is when we put out a note to our hedge fund clients to buy this one, and so we're pretty happy, up over 100% now, but still holding because it's just a great company. They're really figuring it out. They're the top of what they do. And yes, going into earnings, I would say that the bar is pretty high. Last quarter, they beat on revenue, they beat on earnings, they beat on revenue by 26%, earnings by 39%. They've expanded their partnerships, their relationships with a lot of companies, Netflix, Fox, CBC, EW Scripps, Spotify. They've got a customer retention rate of 95%. And they're actually the only platform, the only ad platform where majority of their customers are expecting to increase their ad spend. Now, there's a lot in the high 40%, but they're actually over 50%. So they're doing really well. And I think one of the reasons is they've got the technology figured out, and they're even improving on that technology. So they've introduced a new AI platform that helped their customers reduce their cost per click by 36% and reduce their cost per action by 34%. And when you think about that, you might think, well, that means their customers are spending less. And no, it doesn't. They have a budget, and what that means is that their customers are getting more. They're spending the same, but they're getting more, and probably they're going to increase their budget because how much of improvement they're seeing. They're actually seeing their reach on average. Those customers that switch from the old platform to the new AI platform, they're seeing that their reach is increasing 70%. So they're making their customers happy, and they're just frankly doing a great job. When you look at the web traffic to the trade desk, it's a beautiful chart, because right at the last part you can see this ramp. I mean, there was an uptrend, and you can see an uptrend barely, but over the last year it kind of flattened out. But these last few monthly bars are just beautiful. I mean, up 77% on a year-over-year basis, really starting to ramp up. And I think that this is why the stock is doing so well, is everybody knows that they're crushing it. Their customers are happy. Their customers are getting better results out of it. They're sticking around. They're spending more. And so, obviously we're bullish on them. Going into earnings, though, it's tough, because now you've got these really high expectations. So what do you do with a company when you're talking about earnings where you know that they've got strength, they're doing really well, you expect good numbers, but so does everybody else, and the price reflects that? That's tough. That's the kind of the position that we're in. So I think the strength of their data versus the move in the stock price somewhat cancels each other out. And so we're a little bit more muted on the specific earnings report. Long-term hold, love it. Earnings report, we're more of in the hold camp right now on earnings.
Yeah, and Landon, perhaps earnings could present that opportunity on pullback for those who maybe didn't get that note so many months ago from your team on why you like this name. But I'm listening along, and one of the things that's always stuck out to me about this company, to use a comparison in a different industry, it has Shopify-like vibes where it kind of hangs out in the background, but it levels the playing field against these Alphabets and Metas that have such a stranglehold on digital ads. Much like Shopify makes it easier for some of these companies to compete with the Amazons and the Walmarts of the world. I know it's not a perfect comparison, and of course Shopify kind of peaked out several years ago. But I do still think that to the everyday retail and trader, TTD is an overlooked name, as crazy as that might seem, given how strong your data is and how strong the performance is.
I think you're absolutely right. It's definitely overlooked because, it's not something that you deal with as a consumer. As an everyday trader, it's not, you don't even really know about this company. They're in the background. You know about Netflix, you know about Google, you know about all of their competitors and all of their customers. but you don't really know about what they do. You don't interact with them directly. You do indirectly, but as a consumer, but you don't directly. And so I do think they're overlooked. And yes, they're helping sort of the little guy. They're the collaborative effort for the little guy to take on the big ones. I think it's a pretty good analogy, frankly, with Shopify. One of the things that I think a lot of investors are seeing that gives them more confidence in future upside is just the discrepancy between streaming data and streaming data ad spend. And that's what we first started looking at. That's what we saw a year and a half ago. Was there was, I think, like a 30-to-1 ratio. It was unbelievable. We knew that gap had to be filled. That gap is getting filled. It's getting filled by TTD. But when you look at the number one provider of streaming video, Netflix, comprising about a 32% share, they're only comprising about an 8% share of ad spend. Now, it's a majority paid platform, right? But they're starting to introduce this, or they have introduced this free tier that's ad supported, and they're doing well with it. And we only see that segment growing and potentially getting cheaper and cheaper with more ads for those customers that don't like to pay whatever it is, $8 a month. So that gap between 32 and 8.5, and what this chart represents is the orange bar is the percentage of streaming that people watch on each platform, and the white bar is the percentage of ad spend on those platforms. So you can see it's way out of whack for Netflix, frankly for Hulu too, but it's way out of whack for Netflix. And we expect it to move more towards where Hulu is, because Hulu is a lot more free, whereas Netflix is not. And if Netflix starts getting more and more free ad-based stuff, that 8's going to start pushing to the right. And every move that goes to the right is dollars in TTD's top line. So I think there is still room for growth. They're the best of breed in this category, and they're doing really well. It's just a question of valuation. Well, long term, I love buy high, sell higher. Short term, I'm a little more skeptical. But as you pointed out, you get a little bit of a pullback here. And if you like this company long term, if the earnings come out great and there's a little bit of a sell off because it's a sell the news situation, I think it'd be a great time to pick up shares.
Now, some of that data that you had, especially the web traffic there, Landon, that's a concern for me because the election's over. Right? And we know that digital ad spend really picked up. Both parties had a lot of money to spend, and you couldn't watch normal TV just because it was nauseating, the amount of ads that you got. Is that the key to this report, where they're probably going to beat, they're expected to grow 25% on revenue from year-ago levels. Margins are supposed to increase, but with the stock this high, I know you guys are bullish long-term. With the stock this high, is guidance a key for this report? Because if they say, hey, the election's over, next quarter we don't have a lot of bookings for digital ad spend, or it's coming down a little bit, that might be, the thorn in the side of the stock post earnings.
Yeah, I think that's definitely a concern. I mean, this is a pretty good year for advertisers between the Olympics and elections obviously bigger, but it's been a kind of, nonstop feed of money into this sector. And now, like you said, it's over. There's a hard stop, right? There's no more political ads today, thank goodness. But I think everybody knows that it's there. They know that that's being cut off. And then it's just a question of, when you report these earnings, TTD, obviously you kind of need to tell us sort of how much of that was election and how much is going forward. In other words, guidance, right, like you're talking about. So I think that everyone expected that they made a lot of money over the election season. And will it continue? Obviously not at that level, but I think that they've proven their model to a lot of people, a lot of people in different industries, a lot of people in the advertising sectors, and all of them are saying that, or the majority of them are saying, we're going to increase our ad spend. They're getting more bang for their buck. So I think that they've been tested. They've proven that they've done well. They made a lot of money in the election. Now, moving forward, are people going to increase at a rate that justifies this $130 stock price? So I think that's the question. For us, the earnings score's a plus. It's plus 18. It's not quite where we'd place a bet, but I wouldn't, I'm not going to say don't place a bet on the bullish side. I like them. But it's not quite, we're hammering it. If this stock was trading at 90 or something like that, we would be pounding the table. But at 130, we're just a little bit more cautious and a little bit more on the neutral side.
Yep. If it was trading 90 right now, maybe everybody be scooping it up right now based on your data. All right. Great stuff as always, Landon. Have a good day.
Thanks, guys. Appreciate it.
Yep, Landon Swan, co-founder at Likefolio. Now, if you look at this,